What is going on, guys? It is Chris here and welcome back to another video. Today we are going to be doing the long-awaited SPX analysis for the coming weeks and coming months. Now, as you can see, market has been rallying a lot lately, and so we've had actually basically an 18% push off the lows on SPX and SPY, a little bit different on ES. But I do want to analyze basically what we're looking at on SPX and ES for the coming weeks and months, and if we should expect actually a pullback, if this is even a bear market rally anymore. People are saying we're going to go to highs now, 4,800. I don't think that's going to happen, and so I'm going to break that down for you why we could be seeing a top basically next week, and we're going to be heading to new lows of the year very soon. So first of all, I just want to start out by acknowledging the fact that I did send out a previous analysis on June 30th. I said big rally incoming, and on June 30th was right in through here. This is where we loaded calls, basically off this low right here. So 3,740. Now we're at 4,300 nearly. So 600 points off of that. So very, very nice move. And so right now I want to be calling top, actually, maybe not to the day, but off these big green candles that we've been seeing, there's going to be some consolidation before we do head lower. So the first thing we want to be looking at is the weekly chart on SPX. And we want to go back to 2000, 2008. Again, it's not the same thing. These rallies are not the same whatsoever, but it can help us to give us a clear picture of what could happen in 2022 here. So with 2000, we had 30% decline during the dot-com bubble in a span of 1 year, and then in 63 days we saw a 22 or 21% push. After that, we had our next leg down. So we had consolidation, a leg down, a return to normal phase right here where we're breaking highs, or consolidation here, and then we actually top out there, and that's where we see an accelerating downside move before another bear market rally, and then these final legs down and through here before the chop. Now, same thing happened in 2008. We saw this choppiness accelerated here. We saw this return to normal phase where it actually rallied 15% in 63 days. So again, here 63 days, here 63 days. And then this one for the first initial leg down was only 161 days. Obviously a little bit more quick in 2008 financial crisis. But we saw this next leg down, bear market rally, and then the final legs down and through here. So again, 15%, 21%, and right now we're at that 18% level. And we've crossed the 50% retracement from high to low of the year, and we're at the level of 4,300 nearly. So that's an 18% rally within the last, what is that? I think that's 60 days. I think we have 2 more days until it's 63 here. Yeah. So we could be coming up to the very, very end of this rally. We could be topping out Monday or Tuesday, Wednesday at the latest. Again, we don't know what it has in store for us, but right now the technicals look great, and I'm going to expand on that right here by telling you that look at these waves. Let's actually go to the ES charts. Look at the waves on the, I think I want to go to the 1 hour chart and through here. So we don't need any indicators. We have our first wave here. So this is the bottom, right? We do a liquidity grab in through here. So first wave, second wave, consolidating through here. Third wave is always the largest. So third wave in through here. Bullish consolidation again, and this is our fourth leg. Now the fourth leg is always very quick, and when we saw this dip right here on, when was this, Thursday, I was not expecting us to actually just top out right there. I added to a short position, or I started a short position, and now I added here on Friday. And the reason I'm doing that is because it's not going to top out and just immediately start going down. So if you look at the daily here on ES, it looks a little bit different from the SPX daily. Let's go to SPX versus ES, right? So you can see there's obviously the gaps on SPX. On ES, it's showing the weakness or the strength via this bullish consolidation, and through SPX, you just see gaps. And so right here, we saw big bullish days, a doji, which a lot of people shorted, and now everyone's going long on this. So you have to think about it from the market maker perspective. We have these consolidation moments where everyone thinks this is the top. Now we have this day right here. Let's go to the hourly. We basically top out with a nice doji on the hourly, and we see immense selling, which kind of differs from these other times, because when we saw this selling, it was a little bit more unexpected. Here, a lot of retail believes dojis are super bearish, and there are clear signs of reversals. But we actually see a mirror move to the other side, so now we're actually going upside. It's accelerating to the upside. Right off the 9 in through here, we just riding the 9. And so this is our fourth leg. This is our last leg to the upside. If we look at it from the 1 hour, the 4 hour, this is the last leg. 1, 2, 3, and through here, fourth. And the fourth leg, it's not always the largest leg, but it's actually always the fastest leg. So if you actually measure out all these other legs, third leg takes the longest time, as you can see from here to here, second and first, pretty brief usually. fourth leg, fastest leg. So you're going to be seeing parabolic run in through here, which is exactly what we saw. So if we look at the 5-minute on ES or 5-minute on SPY, you can see we accelerated to the upside throughout the day. Chop midday, but big amounts of buying in through here. And so we're just going upside end of the day. So this is going to be trapping a lot of bulls in the coming days, because what's going to happen now, and this is basically what's going to happen, we're just going to have two dojis, just like this. So we're just going to see consolidation days. We'll see a little bit higher. Oops, Jesus. We're going to see a little bit higher. So maybe a day like this, and maybe a day like this. And so that's going to be, those are going to be their two next days. It's not going to be big upside or big downside. It's going to be range days. When we see these range days, after that, we're going to see a big red candle. When we see this big red candle, people might be adding to their shorts, or people might be shorting. So there's going to be indecision through the first phase right here before we actually head further down. This area is always difficult because people don't actually know what's going to happen. They see the first big red candle after a while, because basically we haven't really seen a 1% day to the downside other than here. And that doesn't even look that big. And this is on SPY, right? So all these dips right through here are very small days. You can see there's wicks on the bottom. And then we're immediately pushing because it's just bullish consolidation. We're going to the upside. So right here, people will be scared. We'll see pivot days in through here. We'll see a retest where we don't break the highs. When we don't break the highs, that's when you short. And we're going to break this level down here where we formed a support. We'll come back here. We'll retest. We'll see a fake out. People will buy again. Here we broke. Nope. And then this is when they dump it. This is the ultimate liquidity grab right there. These are the two liquidity grabs right here and right here. So they push the upside as a retest. It doesn't break. People are expecting a bullish move. Just like, let's see ES. I need the ES chart. Geez. So just like the ES chart, we're going to be seeing a bullish move like this, but then it won't break. So it's going to be a top like this. And we're going to come right here, consolidate, and then we just head further down. That's going to be exactly the moves that they do, because it's the structure that they follow on almost all of their bear market rallies and almost all of their rallies throughout the day. You can look at the 1 minute, the 5 minute, 15 minute, hourly. They follow the structure no matter the time frame, right? So if it's a larger time frame, you're obviously just going to see it on an hourly candle. And then if it's a smaller day trade sort of time frame, you're going to see it in the 5 minute. They do the structure all the time. So that's what's going to happen. I know this is an ugly picture now, but this is what they're going to be doing. Liquidity grab here, liquidity grab here. And so, I mean, again, it does differ from 2000 and 2008, but it's important to keep in mind what's a possibility on what can happen, because this is a very different bear market rally. This is kind of like that return to normal phase that we did see in 2000 and 2008. But again, it differs at the same time, because look at how much we're actually running off the lows. So again, let's just look at one last thing before we end the video here. SPY has rallied 18% off the lows here. I'm just going to round that, right? And ES now has rallied nearly the same amount. ES has rallied 17.5%. It's, basically the same thing. Both are having very similar price action. Obviously, whether it's overnight or during the day, we're seeing the same sort of moves on ES and SPY. And so this is kind of that area where we want to be shorting after these two dojis. That's a big takeaway from this video. This is where we want to be shorting right in through here. People get greedy because they see the market pumping. Again, return to normal phase. We just go to the 2000 and 2008 chart. Let's just go to the daily at this point so you guys can actually see. Let's go to SPY. The daily, when we were having that return to normal phase, notice how it's just having this parabolic run. So we see chop to the upside, and it's still running, right? You see lots of dojis in here, very ugly chart. But then we start to see it accelerate in through this area. This is where people start to long. So when everyone is calling for the new regime, when everyone is calling for the new bull market, that's when you short the hell out of the market, because everyone's bullish now. All of retail, at least. And is retail very smart? No, I'm retail. I'm not, a genius or anything, but I know that I can spot this. Everyone, you're just looking at this part of the chart right here. Everyone's longing that because they think it's going to start breaking these highs. The next technical analysis high, right? Just broke through a resistance in through here, consolidation range. We just broke above that. If we were trading this in 2000, this is how we would be trading. That's how all of retail would be trading it. Resistance right here. They all long right here. This is exactly the same thing I just explained. They all long right here. It comes down here. Oh, retest, and we broke through. Okay, it's valid for the upside. They all longed right there. What happened the next day? They dumped it. Next day, oh, a little bit of chop. Okay, we're fine. And they just keep dumping it. And people think, oh, it's consolidating below. It's going to push back up. And that's when it accelerates. So it accelerates to the downside. Again, you're not going to be able to spot it until it's too late, because everyone's going to be shorting down here. Everyone's going to be shorting down here. And then it's just going to start bouncing, right? You can't be shorting at the bottom. You do have to take some chances, because the amount of upside is very limited compared to downside. So if you do take a short position, say puts like me, you're really just going to get stopped out pretty quickly, because there's no there's no way this can actually really go much higher. If we short at 4,300 in SPX, 430, basically I'd be selling maybe when it gets to 4,400, which is 2%. That's 10 points, it's 2%, or 100 points, right? It's a very minor amount of upside that we can have anymore. This is the parabolic run to the upside. I've repeated myself too much, honestly. I'm making this video a little too long. You guys get the point. We're going to see dojis right here. We're going to see consolidation days, wicks to the downside, and it's going to be showing us we have strength. This is when they're just going to absolutely have a massive red day. Maybe not that big, obviously, but maybe, 1.5%. They push it back up. We have consolidation, right? We have that normal distribution. When we break here, we retest and we break back above, and then we head further down. This is the move. So hopefully you guys enjoyed the video. Hopefully this helped. I know I made it a little bit too long. I was repeating myself frequently, but we are going to see a crash soon. So just be prepared for that. And I'll see you guys in the next video. I'll keep you guys updated on what I think the market's going to do. See you guys.